Patil is our market master of the day. He's Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, good morning. Great to have you with us here on the program. It's a pleasure. Just absolutely incredible last 2 weeks. It was kind of almost, I'm only half joking but half serious. Very difficult to lose money in a market like this. At least it has been like that over the last fortnight or so. But what from here, Mahesh, in your opinion?
Yeah, good morning, Prashant. Yeah, so I think last couple of weeks have been fantastic. I think we've seen market probably discounting too early, right? The kind of conditions where we are seeing that now rate cuts probably will be much sharper in the US in the next calendar year. So essentially, kind of a more easy kind of a monetary policy, I think, is what cheered the market, but slightly running ahead of the fundamentals, okay, because not much change really in terms of the outlook over there. But I think overall, as we move forward, right, a lot of the risks which were there in the market in this calendar year, I think they are getting mitigated to some extent, whether it is on inflation. We're seeing inflation now anchoring now at much lower level. Even rate cuts also, we've seen a sharp rally in the bond rates. Both as well US as well Indian bonds yields have come up sharply. And then I think overall the growth concerns which were there in terms of whether US will see a deep recession, I think those are also getting eased off. Market is now looking at more of a soft landing. And even back home over in India also, we've seen that the numbers which have come in, right? The GDP numbers have also been on the surprise on the positive side, especially on the manufacturing and on the investment side, which was people were expecting that, but I think that's clearly showing that the whole investment cycle is slowly starting to pick up now. So I think that gives a greater visibility going forward that the recovery which we have seen will continue to sustain, and that will ensure that the corporate profitability growth should be fairly good even going forward. So I think the markets are now slightly probably ahead of the fundamentals, I would say, but I think in a scenario where we are looking at the financial conditions would probably be slightly easier, and the fact that even if you look at volatility also, right, in Indian markets across the board has been fairly low. So I think in that scenario, I think the risk premiums, the equity risk premiums could probably expand, and that's what we are seeing. The multiples are expanding, and I think at this point in time, I think slightly cautious because the run-up has been too sharp, and in a few stocks, in a few sectors, it's is much higher. But I think for long-term investors, I think there's nothing to worry. I think continue with their SIPs, I would say. Probably in the next calendar year, when we start in that period, you could take a fresh view. FIs could take a fresh view. You could have to see how the allocations happen over there. But I think pre the elections, general elections, I think there could be some rally, and that's what we're seeing. I think after the favorable outcome of the state elections, markets are trying to believe that you would have a stable regime. So I think it's a rally which is could sustain, but again, one needs to have a more balanced view at this point in time. As I've been saying, that interest rates are also still on the higher side. I think at least in India, we don't expect any sharper rate cuts, right? We expect rates to remain at elevated levels all throughout the next calendar year. So I think some breather is probably required, and that's what I think you should see.
All right. Hi, Mr. Patil. Good morning and good to see you in. Nigel on this side. Mr. Patil, what about for 2024? Which is the top sector that you'll be looking at? Banks have come back into form after underperforming for majority of the year. But what's your view? The sector to watch of 2024?
So 2024, again, I think banks, as you rightly said, still looks fairly good, though they haven't done too great in this calendar year, though the earnings growth has been fairly decent. But I think if our view is that rates would probably, at least in India, would remain higher for longer, I think you would not see the NIM compression which one was expecting. I think not at least immediately. And overall credit growth has been fairly strong. Again, we are also seeing some pickup now on the corporate lending side, which has been weak for now many years now, and that's a positive sign which should expect the overall growth should be fairly strong. And on the credit environment also, I think the credit cost, we don't see any kind of a meaningful escalation over there. So I think banks, where the valuations are still fairly reasonable compared to where the broader market is, that I think looks good going forward. Even sectors like, for example, industrials and manufacturing is looking good, though it's done well in this calendar year. But there again, the overall investment cycle, I think private sector capex should pick up post-elections. I think the conditions are right now for that to pick up in terms of the corporate balance sheet, which is fairly delevered. Capacity utilization levels are also reaching a level above 75%, which typically triggers investment cycle to pick up. And assuming there is more confidence post-election, I think you should see that recovery also help the industrial and the manufacturing sector. Apart from that, as a defensive, pharma sector is something which pharma and healthcare, I would say, because the market, I think, has probably run up reasonably on the cyclical side. But pharma, I think we see that their domestic growth should be fairly steady. US also, I think, generic space, the pricing pressure is likely to ease off, and especially on the healthcare side, I think where we see hospitals, diagnostic, this is a space where the market share gains from the unorganized sector will continue to show better growth over there. And I think on the contrast side, I think IT sector, which has been kind of a laggard because of growth concerns in the US. If we've seen the US that the recession is not really hard, then that's a sector I think which could continue to, which could probably bounce back in the next calendar year, because overall structurally, I think the spend towards digital and towards technology over a medium term, I think should continue to be there. I think despite the current cut in the discretionary spends, which we think is temporary, I think the medium long-term outlook there still looks fairly decent.
Okay, well, it's definitely sugar, which is really the sector of the day. We have Bajaj Hindustan, which has rallied 7%, Dwarakesh, Uttam, Kothari, Sakti Sugars, all of them up anywhere between 6 to 7 odd %. So definitely a big up move which is coming in on the back of the government relief. Mahesh, hi, welcome to the show. Would you have a view on sugar? You know, if you look at them, it's a mixed performance on a year-to-date basis. While they are rallying on the back of this relief, would they be fundamentally strong buys according to you?
So on sugar, we don't have a very strong view because, I mean, while the whole ethanol story is what has been driving, and I think the sector has seen some stability in earnings. I mean, earlier used to be the sector earnings should be fairly volatile and cyclical. Now with ethanol being a larger part, and there the ethanol blending policy which has been there has led to stability, and that's why we've seen this sector getting interest, again generating interest, and more importantly, there has been some re-rating of multiples. But again, I think some flip-flop in the policy has led to further volatility in this sector. I think if the policy on blending structurally that continues, I think then you could see the volatility in the sector should come down. And then in that scenario, I think it can be a sector, okay, where whenever there are these corrections, I think that can be an opportunity to look at the sector more positively.
Okay, all right. That's on the sugar space. But Mahesh, you know, you briefly touched upon banks, and I just wanted your thoughts on the entire PSU banking space. Just a quick word. Last week, the PSU space, the Nifty PSU banking index was up around 14 odd %. Do you think that that's a good space based on valuations that one can still buy as a value add?
I think overall, as I said, the conditions on the banks are fairly benign at this point in time, and that's what is benefiting the PSU. Especially we have seen in terms of the credit costs. There are also strong recoveries which have been there on the past lows which have been written off, which is also helping in showing better profitability for the PSU banks. I think that will slowly kind of ease off. Having said that, I mean, the PSU banks are also now growing fairly decent. I think we see a lot of these banks are now focusing on the retail side of the book, which is gaining some traction for them. And I think at least in the near term, the outlook there still looks good because we're not seeing any kind of, because the biggest challenge for PSU bank comes in when there is stress on the credit quality side, which I don't think there is any reason to be worried about at this point in time. And while there has been significant amount of re-rating which we've seen on the PSU banks, I think there is still probably some scope there for them to move up. But I would say that, again, if I'm taking a longer term view, structurally, we think that private banks is where the place should be. And while the market share gains for the private sector banks have kind of come down, the pace of gains has come down because PSU banks are coming back in terms of credit growth. But structurally, we think that trend for market share gains, private banks will continue. And again, among the PSU banks which are slightly focusing more on technology and trying to make those investments, I think probably stand out within the PSU bank itself.
Okay, all right, Mahesh, it's been a pleasure. Thank you very much for joining in and speaking with us, and wishing you a great festive season and a year end as well. Thanks very much for joining in.